I'm joined by Joachim Faber. He's the CEO of Allianz Global Investors, owners of PIMCO, and also part of Europe's largest insurer. Thank you so much for joining us.
Hi, good morning.
There's a lot of really debate about whether we're right here in Europe to go through these austerity measures or go for a more US-style approach and try and put, again, some cheap cash and have an extra kick in terms of stimulus. Are we wrong here in Europe to go through these austerity measures?
Well, I think it is right that we are starting with this. We have a European Union and a currency union, which obviously is not backed by the same political measures like in the United States. We clearly in Europe will have at one point in time go more towards a transfer union, but we also have to make sure that all those countries who might want to have some transfers are being prepared at that time to also play more on an equal playing ground.
Now, back in September, it seemed pretty clear that actually a lot of interest rates weren't going to rise across the world, but especially not in Europe. Now the situation may be changing. We have a little bit of inflation. We had those hawkish comments from the ECB. If we get a rate rise, how does it impact your business?
Well, our business is there to serve our clients, both equity and bond investors, in any capital markets environment. So that is not, I mean, I share that view. I share the view that on the long end, the bond yields are bound to rise this year. It is not very clear whether short-term rates will follow at the same time, because we have various situations in the world, obviously, which rather require a very low short-term rates. However, for our business, we see already today our bond investors shifting away from pure duration products in other product categories like TIPS, like emerging market bonds, like unconstrained strategies, asset allocation strategies. So we don't think that our business will be impacted.
We've seen an incredible year, if not, 2 years. Markets are still strong despite weak economic growth because of this cheap cash being poured. We're also seeing possibly a lot of investors looking at bonds very differently because we're talking about restructuring and possible haircuts. Does it, again, just change the way markets are going to operate in the future?
Well, I don't think that will be a dramatic change. We have had haircuts on bonds in Latin America. We had it in Eastern Europe. It's not completely unheard of. I would say, though, that what is one of the big themes also here in Davos, that it might be the end of cheap capital. It is certainly a time on higher risk premium on risk assets in times when not only in Greece and Spain and Ireland, but also around the world, government deficits are rising and getting to, as we just have heard, in the United States, in UK, to quite important levels, I have to say.
Would you, for example, at this point in time, consider acquiring any asset managers? Because there does seem to be a little bit of a flurry of M&A activity, and this may be a good opportunity.
Well, we are not keen in growing through acquisitions. We have grown the last 8 years from 200 billion to 1.5 trillion, more or less, after we have finished our round of acquisitions organically. So, and we feel perfectly capable also to grow further organically without big acquisitions.
Mr. Faber, thank you so much for joining us this morning.